Here is the U.S. market summary for Tuesday, July 22, 2025. Today, the U.S. stock market exhibited a mixed performance. The S&P 500 recovered from early losses driven by weakness in technology stocks because of capital rotation into defensive sectors such as healthcare and materials, ultimately closing at all-time high. The Magnificent 7 index declined for the first time in 9 days, yet over 400 stocks within the S&P 500 finished higher, indicating broad-based buying interest across the market. In contrast, the Nasdaq edged lower amid cautious investor sentiment ahead of earnings releases, while the Dow Jones closed higher. In commodities, gold prices continued their upward trend, whereas oil prices dipped slightly. The yield on the 10-year U.S. Treasury note declined, and the CBOE volatility index remained below 20 throughout the month, reflecting market stability. In the cryptocurrency market, Bitcoin advanced while Ethereum experienced a modest decline. The IT and semiconductor sectors showed weakness due to certain earnings reports and psychological factors. According to a Wall Street Journal, SoftBank and OpenAI's $500 billion AI project Stargate is facing challenges as heightened concerns over AI investments. Defense stocks underperformed. Lockheed Martin reported second-quarter revenue below market expectations and recorded a $1.6 billion loss on certain defense programs, leading to a stock price drop of over -10%. However, reports suggest that a reduction in SpaceX's involvement in national defense projects could benefit Lockheed Martin over the long term. GM disclosed an $11.1 billion hit from tariffs, causing its shares to plunge 8.1%. Tesla faced pressure from concerns over declining vehicle registrations in California ahead of its earnings. Apple rose on reports that the European Union may accept its proposed changes to the App Store fee structures. Alphabet continued its upward momentum amid strong expectations for revenue and earnings growth. Open Door Technologies, which surged over 500% recently, corrected by -14% on the day. Overall, the earnings season is progressing favorably, though individual stock performances are markedly divergent. Investors are closely monitoring upcoming earnings for commentary on tariff impacts, AI-related expenditures, and macroeconomic uncertainties. President Trump continued his criticism of Federal Reserve Chair Jerome Powell, urging a 3 percentage point rate cut but avoided explicit calls for immediate resignation. Treasury Secretary Scott Bessent stated that Chair Powell can remain in his position until his term ends in May 2026, and there are no plans to force an early departure. Federal Reserve Governor Michelle Bowman remarked that the independence of the Federal Reserve in monetary policy decisions is critically important, while transparency and accountability are also required. According to the CME FedWatch tool, the probability of the federal funds rate remaining unchanged at the July FOMC meeting stands at 97.4%, with a 2.6% chance of a 25 basis point cut. President Trump announced a tariff-free trade agreement with the Philippines, stating that the Philippines will pay 19% tariffs, though the Philippine government has yet to officially confirm this. Additionally, Treasury Secretary Scott Bessent indicated that discussions on extending the August 12th tariff truce deadline with China will occur next week in Stockholm. UBS forecasted that threats to Fed independence and geopolitical uncertainties will likely increase market volatility as the August tariff deadline approaches. Baird's Ross Mayfield commented that the market is in a wait-and-see mode ahead of the August tariff deadline and Magnificent 7 earnings. Infrastructure Capital Advisors Jay Hatfield stated that the U.S. stock market appears stagnant, and a year-end S&P 500 target of 6,600 implies about 5% upside, adding that strong technology stock earnings are essential. LPL Financial's Jeffrey Roach remarked that the exceptional nature of the U.S. economy justifies higher interest rates, and there is no reason to gut them amid inflation above target.